Hello everyone, and welcome to the PivotBoss monthly market outlook for the month of May. It is Tuesday, May 4th, 2021. We have a packed show here today where we have several good long-term candidates to take an eye on, or take a look at rather, and then several swing buy candidates as well. We're going to start with some futures markets, and we're going to start with Bitcoin here. But thank you for joining me here today. If you have any stocks or any charts in general that you'd like me to take a look at, please type it in the chat. I'll get to it here as we move along. And let's go ahead and get started. So the first one I wanted to take a look at here is Bitcoin. Bitcoin has been a tremendous mover here over the last year. Perhaps the best asset out there, obviously rallying from 4,000 on the lows of last year and going to a high here of 65,520. That's a tremendous move. One of the moves that happened here recently was this key range developed over the course of 2 days. We had the idea in a trading room that if any move below 30,000 occurs, that could be an opportunity to buy it for the next double to 60,000. And you can see that that happened, and it took less than 2 months. That's tremendous how quickly that occurred. But again, 29,000, 30,000, all the way back to 60, and it happened pretty nicely. So that happened off of this key range that we were looking for. Off of that range, we were looking for a move up toward those higher targets. We got it. I still have that key range marked just from the high, mid, and the low perspective, but now using this key range here, or have been using this key range, which shows the current high and low. The first retest of that low right here was a buy for a move back to the top of the range. That's kind of key range 101 rejection trade idea. The 100% target is here. That's 70,680. And you know, we're kind of on a line to get to that zone here. If we can find a rejection, perhaps that target could be ahead. But one thing to watch out for is perhaps the newly developed key range. That's one that may be even better to watch out for. So if you look at this from a quarterly chart perspective, the quarterly pivots, that's the previous quarter's high, previous quarter's low, previous quarter's close is way up here. So a huge quarter up, right? I mean, it doubled from the low to the high. It doubled, and that's the range here. And so we've mostly stayed in the upper half of the previous quarter's range. That's the high. This is the midpoint, and we've traded only in the upper half so far throughout the first part of this quarter. This high to this low is a pretty good impulsive move. And it comes as a result of rejecting the previous quarter's high and close, right? So there's a strong high, it rejects here, and boom, this thing drops. And now the recent bounce has taken us right back to the close, and we've seen a rejection develop here over the recent trading day where price came into that level and dropped. So are we starting to put in a bit of a near-term top? Do we have a trap here happening with a bit of rejection off to the right? Is there a little bit kind of like a head and shoulder type of pattern? This would be a shrunken head type of head and shoulder, but you can see the type of framework that's developing. So from that perspective, this level right here is still the most important. That's 45K. That's the level we talked about last month, is that if we sold off from here, we could drop as deep as that, and then it could be an opportunity to bounce it back up. And you can see, I mean, we said that on the first trading day of the month in April, and we got very close to reaching it. Got to 47.3 instead of 45K, and then bounced a little bit, so almost got to that low, but you can see the LVN there. So here's the deal. We can continue to work off this smaller key range, which identifies 70, but I think that there could be a better use of the most recent impulsive move so that we can find those targets up ahead. And so from this impulsive sell-off and this bounce, we get these pivots right here. Those are the developing pivots. this would be the midpoint right there, and that would be the current last price. And from that range, you can forecast higher 100% target, and that gets you 83,645. So 83.6 could be the next upside target. And what I usually say, if this is a key range, which it is, then the best spot to buy would be a trap below the key range low. So if price were to drop down here below that key range low and trap in here, you could trap in the LVN, bear trap below the key range low, and return it back to the middle, return it back to the high, and ultimately, perhaps down the road, you make a move for extension to the 83,645 target and hit that 100% extension. So, you know, to get 83, or call it 84 for easy math, 42 would double. So is 42 the next best entry for this one? Again, 42 would be right inside of this LVN here. This is your B-shaped profile, because you have this double distribution from here and here. And the strongest portion of that B shape is that middle LVN. That is the most significant portion. If it drops into that LVN, it's an opportunity to reject it back to the top of that distribution and then create the next move through to the next distribution above, which would likely be 65 to 85. So that is the next longer term idea for Bitcoin. 83,645 as the upside target. Not sure how it's going to play out in the meantime. You know, you have this impulse move whenever you have a strong top and a strong low, and then you bounce back to the mid. That's a market that is setting the edges. It is setting the edges so that the market can facilitate trade between those two extremes. It builds some energy, and then it moves after that energy is built. So right now you have this impulsive move. It sets the high. That's the high. 65,520. That's the low. 47,395s. And now it's fair game to trade all in here. And eventually we'll see expansion one way or another. Now the interesting thing here is that if we were to see downside expansion, if this range broke to the downside, and say we broke to the downside and this doesn't hold, then you go to the bottom part of that B shape into this lower LVN. That would be the previous quarter's low. That would occur upon a violation of this midpoint, and you open up that low. And then when you take this range from here to here, when you take that range and you forecast lower 100%, you get 29,270. That's your 100% target. So it's right here with the 100% target, the previous quarter's low, and then you have the uptrending 200 day. So we have a great B-shape profile. A great B-shape, great market structure. Obviously hard to bet against this trend right now. At some point perhaps the music will stop, but until the music stops right now, the music's still going. And so right here, a 42 opens up an 84 down the road. If you fail to hold, 42 or 40K, then we might be headed back to 29.2 or 30K, right in that zone, the other side of that B-shaped profile pretty quickly. So those are some thoughts right now on Bitcoin. A strong key range high and low. I can take this one off right now. I'm not at the moment. I probably should. I got a lot of lines here. But I'm not marking this one yet because we have this range over here that's giving it to us, so it's already doing the work for me. So some thoughts on Bitcoin. We may see a little bit more chopping back and forth in the near term. Eventually, when expansion occurs, we might have some great targets to play to. So there's some thoughts on Bitcoin. If you take a look here at ETH, that's Ethereum. This is the actual future. So the Ethereum future is out now. We have this key range that developed, or at least that early initial key range. We've already reached those extensions there. So you can see from that high to this low, we've reached the 100% extension. So it's already there. We continue to see just a continuation higher. Major strength here out of this one yesterday. Fade after trend day with a retest after trend day and a continuation higher. This thing's still pushing higher until proven otherwise. And kind of like what we just talked about a moment ago, you have this distribution like this. You have your B right there. And then whenever you explode higher, you start creating the next LVN. And ideally, you know, you create that D-shaped profile above it. So we're not done going up. At some point, we'll find some sort of high, maybe drop into the D and build out here and hold 2800 as support. So right here, starting to develop the new market structure up above. Here, let's see if this... I was trying to see if the... is this it right here? There it is. BC. I think that we're ETH USD, and it brought it up right here. So now we have kind of the full view here of this thing. And the breakout last year here was tremendous, huge move. You got the additional compression here with another breakout, boom. You have the pullback and go, the pullback and go, and you've continued. Nothing's stopping this right now. And it could continue to push higher at a tremendous pace. Again, right now, any pullback here takes you into the top of this 28, and from there it may build out up here with a continuation ahead. So this thing is still looking strong, still pushing higher, obviously still trying to fill out some of this imbalance in the profile here. So, you know, anytime you have this type of imbalance, there's always the potential that you could swing theoretically all the way back to here, to 1800, to kind of fill in this and then continue higher from there. So there's always that chance. And with this one, that chance is about a 50% haircut. We're at 36, you get, you know, back to 18, that's a 50% haircut. If my math is right. It's incredible that that would be that already. But anyways, this is a strong one. We might be at a cycle high. Any pullback could be an opportunity to fling this thing higher still. So we'll keep an eye on this one. But more strength up ahead. Let me see if I can find these other ones as well. This is KNC USD. It's not popping that one up like the other one did. And then you have XTZ USD. Let's see if that works. I'm not getting it right now. Oh, well, I'll see if I can get those in the room later on. BC, we'll try to get those up and see if we can keep those on the list there. Okay, so I just wanted to start off with crypto a little bit. Bitcoin here, been a tremendous mover lately. I think it could double given the right pullback. Ethereum remains Ether remains very strong. Just tremendous bullish market here. And again, any pullback could continue this thing higher. Looking at some of the other futures contracts, let's talk a little longer term here for the NQ. What's about to happen now? What was today about? Today was a 200% of average range day, which means if you take the average range over the last 10 sessions, today was over double the size. Today's range was 215% of average daily range. And we can quantify that by using this indicator down here. We'll bring this up right there, and there you go. So now we are at 1 day, and so this is quantifying 1 day right there. And if you look down here, a big day, 411 points of range, and that is 215% of its average. The average being 210, now 411, pretty big. One thing to note about this is that this was a significant day, unlike anything we've seen in a little while, but it's about average for the types of big days we've seen. You know, if you look here, there's a big day. You know, I'm talking, you know, all this entire week we're 400 point days. You know, that day was one. Even this initial drop day, right? All of the biggest days so far recently have been 400 plus point days. Huge ADR days. Here's the point of this right now. When you get one of these 200% of ADR days, it is a signal that the market is likely about to increase in volatility over the next 1 to 3 weeks, maybe even the next 4 weeks of trading. So to get 215% of ADR, it is a beacon. It's kind of like a shining light that says, hey, be on guard for the next 1 to 3, 4 weeks, because it could look like this. Could look like that, right? It could look where you have a lot of volatility in high range days. It's not going to be this and it's not going to be that, right? It's going to be something more significant. So when you get that very first 200% of ADR day after a while, that's what this was. It was the first 200% of ADR day, and look at what it brought afterwards. Lots of volatility. We'll likely see increased volatility here over the next 1 to 3 weeks, maybe even more. What does that mean? And how much volatility will we see? It's hard to tell exactly how much. I mean, in terms of how this thing will play out or how low it might go. But I'm looking at this thing kind of in terms of the 13.2 to 13.3 zone. That's kind of the fulcrum, the pivot, if you will. If price can come down into this zone and generally stay above it, or here's the previous quarter's close price, if it can generally stay above that level, we have a shot to, you know, kind of bottom out and continue. That's the thought. If this violates 13.9 or 13.090, the previous close, or the 13K level, right where the breakout occurred, that's when it opens up the recent low here. So it's hard to tell right now how deep this thing will go. There's clearly the potential to go all the way over here. If we do hit 12.2 or this low, or come below this previous quarter's low, it's got to be an opportunity to bounce this thing back. It's got to be buy 12K for 13K type of idea with 14 and 15 to go, right? Initially, when we talked about this last month, first trading day of the month was here, and I mentioned this had all the characteristics for a rally. And I mentioned at the time that we could go to 15K. I said this has like a 2,000 point back end here. We got the rally at 13. We went to 14 and stalled. Do we finish up and get that 15? The way to do it would be to find a strong low here. Either today, maybe tomorrow we find a strong low, and then it starts to work its way higher with a higher low. And that's a way where this thing continues higher toward that 15K upper target. Because remember, at the end of the day, we're watching this key range. Its ability to hold the bottom of the key range after it rejected the low here suggested we go back to the top. That's why we had 13.9 to 14K in view, and we got it. But it wasn't able to get going through that level. So we still have this target and this target up ahead. That's 14.4 and 15K. When do we get there? Do we have to wipe out first, or can it find a higher low relatively soon? This sell-off doesn't have to be, you know, 3 or 4 weeks in the making. It could be one good day down, chop around, and go. We'll see. So just some thoughts on the NQ and what the key levels are. If over the course of the month this thing wipes out April's gains and then starts to wipe out, you know, the March low, that could provide a tremendous opportunity to return this thing right back up. So it wouldn't necessarily be a bad thing. Sometimes these great pullbacks provide an opportunity to jump back in. So some thoughts here on the NQ from a longer term perspective. This key range is still in play. 15K could still be ahead, but right now trying to measure how much more pullback do we get first. Great question here by JD. Do you think that we could see a huge divergence between the ES and the NQ? For example, the NQ heads down, ES up over the next month. That's a great question. I think they're okay. So if this is the NQ, I think the NQ may see a bigger pullback. The ES may see more of a modest pullback, and what may not pull back at all might be the YM, where it just keeps on going. The YM is the one right now that's not seeing any kind of give. The ES really isn't either. I mean, it had a little bit. Today was down a little bit. But this is almost, for those of you that know my book Secrets of a Pivot Boss, higher value relationship, finishing a strong month, a trending month, you pull back, you look to defend, and you look to rotate it higher. So this still suggests more strength ahead. But I would say that the correlation of tech lagging is still in play. It's still in play. I mean, I looked at a ton of stock charts today, and there's still a lot of tech that's down. Cloud stocks down. I mean, a lot of different things down, much more than on the other side that were actually showing signs of strength or bouncing. UPS going through the moon. So it is a very split market with some industry groups doing better than others. Some finally recovering and pushing onward, whereas tech perhaps giving some back still in that phase. I mean, Apple not able to get going to the upside. So that divergence could continue to play out. So great question there. An ETF, that's a good question. Is there an ETF that correlates well with Bitcoin? There might be others in the room that may know of an ETF better. I know the one that I knew before really diverged, and then they were trying to get several other Bitcoin ETFs that were try to get them, I guess, to get passed, and I don't know if that ever happened. This one is kind of, I don't know if this is an ETF, ETHE for Ethereum. This is one that I had been following for a while and has been a very good proxy, but perhaps not a perfect proxy for actual Ether, right? The Ethereum futures or the coin. Perhaps not a perfect proxy, but this has been a very good one. When this one had the rounded bottom, we called this as a double, a candidate to double, and it did, and then some. And then it came over here and split. Was it 5-1 or something? It split a tremendous amount. And now it's doing it again, 12 plus. So this has been one where you could, if you didn't want to do the coins, you could use this one. I've seen this one play out very nicely. We've had this one at various points as a long candidate. It's done quite well. Yeah, GBTC, that's the one I was thinking of as the initial good one here. But again, that one kind of, I guess not too bad, but it wasn't running right in line. But this is a decent proxy as well. Thank you for that one, JD. GBTC is the one I was thinking of. But I think they've been trying to actually make other ones, or another one that might ride a little bit better with the actual coin. But this one's been good enough as well, just kind of like that ETHE. Okay, let's take a look at RTY. Hey, Dave. Yeah, just starting up here. Started with crypto here first. RTY, this one is interesting to me. Again, this is one that had to really play catch up, and then once it caught up, it really just far outperformed so much, especially since, I think where this one really caught up is, again, as you can see it on the chart, but right here, that's when half the economy really got their juice back. Half the economy rebounded here, tech especially, right away. But the rest needed until vaccine announcement in order to trigger the second wave of recovery. And the second wave is really where this one came up. RTY is the Russell Small Cap 2000. So small cap, small businesses or smaller businesses. And these really came out firing with that rejection here. That was picture perfect. We called that as a buy that day because it's my favorite buy. Remember this, by the way, because I'm going to show you that pattern here in a little bit when we talk about a couple of stocks. I believe Walgreens Boots Alliance, WBA, is the one that's showing it right here. But this is one of my favorites where you get a strong trend day up, and then the next day you have a huge shakeout all the way back down. You take out the low and you rally all the way back up. That's a tremendous failed new low, a trend day with a failed new low kicker there that leads to a tremendous move. So when we had that develop back in November, we called that as a buy candidate and a mover for the next several weeks. But then when you look up and see what it triggered as a result, I mean, it's been much more strength probably than you thought could happen. Well, what I thought could happen. I thought we could see a move like this, and we actually ended up seeing something like this over the course of many rotations as this thing continued to push higher. Great pullbacks and rejections along the way and at important levels. But recently, this market has quieted down. It has gotten stuck inside the range. Last month we talked about the key range for this one. So right here, this is the key range high. You have the key range low. Your midpoint is right here. And so now that the key range is in, that's good. But at the same time, we could be stuck inside this key range for a little while. And you can see this upper dashed line gray and lower dashed line gray. That's that middle 50%. That's 25% above the middle, 25% below the middle. Then you have the outer 25% extremes. Whenever it trades strictly within that middle 50%, that's an energy building phase. I call it a neutral key range. It is one that can tend to have significant expansion down the way with an easy move to the 100% target. So it's building energy this last month. This month, will it move? Will it move sooner than later? We'll see. But this key range with the outer range right here, we have our defined target. It's about a 300-point move from the edge. So when we're looking at the top here, 2650 is the upside target. Do we eventually break to the upside and rally to 2650? There's enough juice in here. There's enough energy to get that move. Or is this kind of a distribution? Is this kind of some sort of distribution after months and months and months of strength? Have we finally kind of failed here to get going, and do we kind of work our way down some amount? Super rising 200-day, LVNs along the way. Any pullback would be a quick buy likely. Again, in a best case scenario, we might see this thing just start to break out right away. If it can start getting through 2320, 2325, 2300, it opens up a continuation and a breakout. There's always that potential that if we see more selling pressure, then I would keep an eye on these lows, right? Going back, key range low right here, that LV in here, because that would be the best spot to do business again. Between 2K and 2100, any prices in there could be the first opportunity at a bounce and go. So those are a couple of action levels there to watch. I like how much energy is built up in here in RTY. It almost has the look like it wants to get going to the upside sooner than later. I don't think we're going to come down here and test that low. But if we do, it would be a great opportunity. I hope we test that low, right? It's the best spot to do business would be here and below these lows. Right there would be a phenomenal spot to look for rejection, buy it, and return it to 2240 to 2260. That'd be an easy move. I don't know if we get there. And instead, again, anything through 2300 starts to really open the door to those upside expansion targets, which could be great down the way. So some thoughts right there on RTY. Tremendous strength overall, but now holding at these highs for a while. If you look at this from a weekly chart perspective, it's kind of silly. You know, you got this volume ledge right here at around 1720, and once it broke through there, that was all she wrote. Just huge. At some point, long term, maybe we have to retrade through this, right? You don't just leave behind this narrow LVN channel for 300-400 points. You likely have to go back and fill it in. So at some point, maybe this is the upper distribution and it goes down here, and then you start to work your way for a bigger recovery. Again, not saying we get there. We're at 22.45 right now. But if we got this, 1700 or something, 1740, that could be a tremendous buy back up again. So, great range up here. Lots of good energy. The toughest part with a range like this is just waiting for the expansion to happen. Is it going to be straight away to the upside? Is it going to break down first? And trying to be patient about that. Let's see. Yeah, my pleasure. The other one here I wanted to jump on here is gold. We've talked about gold here, and I've been very bearish gold recently, and you can see why. A strong top last August. That was an impulse move, trading the lower half of that range. Big rejections on any strong pop. Lower highs, lower highs, lower highs, and once it drops back below the 200-day average, I mean, look at that. Look how long it's been below the 200-day now. The 200-day is going up, and that test, boom, everything's still increasing, going up right here. Still going, pops, going up, and then here just can't get going. Here it's offered, and here the retest is offered. As a matter of fact, in the trading room, one of our members identified that test as soon as it happened, and that test also coincided with the January FOMC key level. So here's the January FOMC key level right there. Price takes everything offered. There's the 200-day, drops, comes back to the FOMC, hits the 200, and we've been down ever since. I mean, 1857, never come back to it. So this market has been very weak. However, last month in the April outlook, we called it as a modestly bullish change of bias that could lead this thing higher. We had a lower value relationship, lower value relationship, lower value, right? This thing been lower value for a while. But last month, the previous close was taken bid, a higher low developed, and price pushed through the previous month's midpoint. Whenever you push through the previous month's midpoint, previous month's highs in play, at that point, we were looking for a higher low to get us back above 1765. So here's the point of the story. 1765 is the key level. The next key level above takes you to about that 1870 level I've been talking about, 1874s. And then the one above that, 1960. Those are the major levels. The one down below, 1670, 1680, right? Those are the major distributions. The fact that this thing was able to take it bid last month as we thought could happen, then we were calling for a higher low to develop. It got it. We're looking for another higher low here. We got it. And then today, after yesterday's trend day, deep pullback. Wasn't pretty, but it held the 1865s, and we're still holding. I've also talked about the 1850 level, or 1765, and the 1750 level. As long as we're still holding that level right there, that bottom pink line over this month, we're still moving higher. And the next push through 2-day highs, you have 1800 here. Look at 1800 here. That's where the sell-off initially began. Whenever this market decides to break through 1800, could be tomorrow, it will be a trend day up scenario, and now we're working our way easily to 1820, 1840, 1850 from a near-term basis. I don't know if we do all of this though, or even get all the way back to the high, I think 1850 to 1870 is about where we go, and then we're going to have to see what happens again, because this market remains in a downtrending channel. It remains weak overall. This is only a counter trend bounce in what could be a more bearish trend. So once we do get up to 1850 or so, it may be time to start looking for rejections, but we have a little bit more upside, and then we'll see what happens up here, because that could lead to something more like this down the road. So gold has done very well. We've been bearish all year, but last month at the change of the quarterly pivots, we were looking for a push higher, and it has done everything it needed to do that, and we could be headed higher still down the road. So not bad here for gold here lately. If it can stay above 1750, 1850 is the next target above, and then start watching to see what happens from there. All right. Oh man, naked FOMCs in the 1400s. That would be way down there, and it could get there. This is the zone right here that's just super important. That ledge right there, the 1670 zone. It held twice here. It held before back here. Nothing is stopping it from going all the way down to the next zone once that area breaks. So on this next push, if it rotates here off this upper edge, do we then rotate to new lows? And if so, does that lead to even more weakness? Not a bad rebound, but definitely, I don't think this is an uptrend by any means. It's been a top since last August. It's getting hit right now. And yes, that's a great question. Do you think the popularity of Bitcoin is hurting gold? I do think so. And it's not just Bitcoin. I think all the coins, altcoins, there's just so much more choices. Many more choices now. Before, gold was it. Or gold was one of a few things that you could turn to for certain, flight to safety or certain types of moves, store value, things of that nature. Now that's not the case. There's many more options, and those options are producing at much higher percentage clips. The moves are just tremendous. So I do think that is playing a bit of a role in this one. Now, having said all that, if there's a failure to hold 1750 very quickly, again, that bottom pink line is holding everything up. You drop right away. We don't have to go up there and try here. It's already struggling at 18. If this thing turns around tomorrow and breaks 1750, we might be headed to new lows right away. So it's a very fragile up move right now. But 1750 is the key. All right. A lot of talk on futures, crypto. Oh, and I see silver here as well. Let's look at silver. I had silver. SLV looked great the other day as one of our buy scan candidates. That one looked really good from an ETF standpoint. Silver here. This one did really well last summer, right? Rallying off of those COVID lows. Since then, a very impressive trading range has developed. That's what you would expect from a market structure standpoint. If you rally 200-300% or whatever, you need to see some sort of corrective phase, and then you need to be able to hold in that range. You're just building higher market structure. That's really good. And again, the opposite end of that range is always the most intriguing part. 22s, super significant there. Actually, that was our last call off that level, was back here off those moves. That's still a level that's in play. I don't know if we drop into those levels, but I do know that if we get to those levels, it's a phenomenal buy opportunity or rejection opportunity. So again, not predicting we get to 22, but I would say if we hit 22, it's an opportunity to watch for a bounce back up. Great D-shaped profile inside this range. No definable value though. There's 4 different HVNs here. So that to me that almost tells me there might be more chop before anything. The other thing is, because it is a D-shaped profile, we've headed from the bottom end of the profile toward the middle. Perhaps, we're headed toward the upper end of the profile here, and we'll see what happens at the top. But this is a classic D-shaped profile right now. The key range of which goes all the way back to the initial blow-off move here. So markup phase, blow off top, and pullback. That right there, that's your key range right here. So go back, mark that high, mark the low, and mark the midpoint. Those are your boundaries. And when you have an impulsive move like that, really great. Best spot to buy, as I keep mentioning, down here, and you bounce it, and you bounce it, and you bounce it. Close here, and you bounce it. Best spot to sell, oftentimes, up here at the key range high, and you fade it, right? Those are the basic trades when it comes to the key range. So I would continue to watch that for silver. Overall, perhaps still headed higher in the swing time frame, but really stuck inside this larger 22 to 30 range in the medium term. Speaking of SLV as well, this was a good one yesterday based off the strength. Close lower, gaps way up. That was a strong one today with a failed low and then pullback. Not as strong, but from a one-day perspective, that looked really good. You had this low, a failed new low today. Again, perhaps this thing is still have a little bit more upside to climb into this area of the chart. So heading higher within the trading range. And Tim's asking here also, what do you think of the Wall Street silver squeeze? Not sure what that's referring to, so I don't have any thoughts on that. Sometimes I live in a hole here. Don't know exactly what all the boards are saying. Here you see a good support here for ZB, or lower edge of the range. ZB has been bearish, right? Really, really negative here, even worse here. It was a star back during the COVID rally, but then once everything turned around, it has melted all the way back to take out those lows. I think that's important. You look at right here, these lows, bring it all the way back, and it took them out here, and now it's trying to form some higher lows. You have a little bit of a rounded bottom accumulation pattern that's developing here. Above 159 starts to open up a little bit of a move higher. Maybe not all this back to that high up there, but you stair step it. The next zone is probably the upper end here of this range after rejecting, the lower end of the range. Last time you had a rounded bottom down here, things rallied. This is the similar rounded bottom with the same amount of weeks involved. Again, easy rally back to 64. Not expecting all of this, but I could see a scenario where we hit 64 and maybe we even walk it up a little bit higher into 68, 69. That would return it back to the 200-day, back to the breakdown point of this range. So ZB right now looks the part for accumulation. It looks the part for a shot at seeing expansion to the upside, and you have a clear kind of level up above to watch, the 159s. Can we get a transition day through there? If you can get a transition day is one of those big old days that takes you from one distribution to the next. Something like this, where you have this distribution and boom, transition day. Okay, we're done with that range, and now we're transitioning to the next range, or transitioning to a markdown or markup phase. You need a transition day here through 159, and that'll open up some sort of markup phase. I think it gets you back to 164 in the near term. So some thoughts on ZB here, but again, above 159 opens that thing up. All right, a lot of good futures talk there. Let's talk some stocks here. I wanted to start off by covering DBX. DBX is one we talked about last month. And last month when we discussed it, it was mostly from a weekly chart perspective. We were sitting, about right here. Is that right? No, right here. So basically, this is the rounded bottom in the weekly chart. And, it looks like it's already kind of broken through the highs. And then it's rotating back right now. I mentioned last time that this is a great longer-term rounded bottom. This one's been in the dumps for a long while and just couldn't get off the lows. Maybe it's finally doing so. So I mentioned with this rounded bottom, any pullback now opens up an opportunity for this thing to push higher, likely into the next zone above 32s. It has enough juice that by the end of this thing, it might be back toward 44s. So if you can get a 22, you can get a 44 double or close to it. So the best spot to enter on these can oftentimes be on the pullback here. You enter on one of these pullbacks because if it's a rounded bottom, ideally you're getting higher lows now until you break out. This is a pullback. Or you do it upon a transition day. Like here, you break out so you get in already and you're trying to hold. So right now this is one that still looks really good. If you look at it from a day time frame perspective, the recent pullback in the market, this looks really solid. There was a buy signal there a little bit earlier. There is earnings coming out here pretty soon, so that's something to watch out for. But from a short-term perspective, I like this one this time around. But that short-term perspective could also be an entry that leads to a long-term hold. So from the short term, we have pulled back, previous quarter's high, previous quarter's close, through those levels, rejected this level, and now testing the previous quarter's mid. This is where the pivot is. It's 25. If it can't hold it, there is the previous low. We go right to it, 200-day, and we try again. Right? That would be a great spot. Remember, 22s. If you can get 22s here, you might double to that 44 target down the way. But from a short-term perspective right now, this looks good. It looks the part. It's at the mid. Can it hold 25? If so, there might be a short-term return back up followed by a continuation. This could end up being a longer-term entry from that weekly signal. So wanted to talk about D-Box again. It has a good weekly rounded bottom, which could open up a big move down the way. And from a short-term swing perspective, this also looks the part. We do have to keep an eye on earnings here in a couple of days. Another one I wanted to talk about was Pinterest. We talked about this one in our trading room today. We've talked about it quite a bit, actually. We had it as a buy candidate here for a return to 75 and a move to the top. And then we had it as a sell candidate here for a return to 75 and maybe a move to the bottom. And look, today it got there. It hit the previous quarter's low. Here's your rising 200. It hit 60 bucks. Today's low 59.85. Now this is significant here. So for those of you not in my trading room, you know this will be newer to you here. But this one, if you're looking at this strong high and this strong low and a bounce back to the mid, you got that new key range. It's not marked because the quarterly PivotBoss pivots already have it marked. And from that range, you have a target that down the road points to about 120 bucks. It's 119.47. So what I mentioned to our group here over the last week is that if we drop into 60, theoretically speaking, 60 can get you to 120 for a target down the way. Now it may take 6, 8 months or more. It may never get there. You never know, right? But the idea is this is not one that gets there overnight. It's one that may take to 4, 6, 8 months out. This is more an investment type of opportunity. Active investing is what I call it. That's a great way to go. Now, if we were to drop a little bit lower, there's a great LVN right there. That's 55s. 55 would be an even better entry. That's only 7 handles away. Can we drop down to 55s? Because now 55, you double at a 110 target right here. And that's a really good target as well. It's much closer. And you could see that happening much faster. So anywhere between 55 and 60 has been the zone that I mentioned to our group, that you could play it up the ladder as a swing. For those of you inclined to hold from a longer term perspective, you may be able to double. One of the doubling techniques that I do is, for the most part, if you enter at 60, then I sell half, or I look to sell half at 120 at a double. Say you buy 1,000 shares, and then it gets to here, you sell 500 shares. You've sold half. You've just doubled. Now you're playing with house money. You've taken out your initial investment and you're playing with house money. The last 500 shares is house money. The first 500 you've taken out after you doubled. You took your money out. And now from 120, this thing could theoretically go down to 0. And I used to say you'd lose $0 less commission, and nowadays there's no commission. So for many normal traders, so that right there, you lose nothing if your plan works out. So we've seen that play out several times in many stocks over the years. We've been involved in many of those. It's a basic, easy math technique. You buy an entry here, you try to double it, and if you do, sell half, and now you can own that stock for the rest of your life, and it's free and clear on the market. I'm not saying it's easy to double everything. I only say it on those issues where everything's aligned, key ranges, rounded bottoms, accumulation, undervalued, things of that nature. This is one of those ones that could do it. 55 to 60 would be a spot to watch. Here's the other thing. For some of these candidates here that could potentially double and you do want to try an investment idea on it, sometimes it's a great idea to dip the toe. The dipping of the toe would be, for example, put in half of your allocated size here, you're in at 60. If we drop, say we drop as deep as 45, the next LV and below, you can enter the next half here, and now you're averaging in, and you'll have a better overall position as this thing recovers down the road. So entering half on the entry and having a kind of an emergency re-entry at the next major level, and then taking off half once you get to that level so you can play with house money. That's one way to go. Sometimes taking off half, not the best way to go, because you're taking off so much in potential return. Some of these stocks not only doubled, they tripled, quadrupled, and quintupled, and went up 10x over the last year. We've seen a lot of those stocks go from $5 to $130. You look at something like Overstock, where last year when it started to run, we were all looking at it being $2 saying, I can't believe this is a $2 stock, and months later it's $130. So you could theoretically have doubled at 4 and then left a bunch of money on the table. So you have to play with those ideas and do what's right in the moment, right? But I like to give you those ideas, those techniques, so that you can have those at the ready just in case. So having said that, with pins, it could be a great double down the road. We're in a zone that, even if it's not a double right now, it's a great swing candidate as well. So from a short-term idea, if you don't want to buy it, or if you don't want to try and double this, and instead you just want to swing trade it, this is a decent rejection. It's not the best. It's not the best because it's a tiny bar. So if you look at the 1 day, not super tiny, I mean it's an average bar, but it's not a big bar. This was a significant rejection. Look at the size, look at the range. But it is in a good spot. It's at an edge. It's around the 200. I think it's close to a good short-term reversal. Maybe it happens sooner than later. Sometimes it's hard for me to really like a tiny rejection bar there. But in general, this could be an opportunity where if it can hold this low, you can certainly buy the options to get in. An in the money option idea would be a way where you could, depending on what you're playing for, right? If you're playing for the 1 to 2 week return, the swing move takes you, 60 to 75. That's your swing move of 1 to 5, 7 days. And then you look out 2 to 3 weeks out, 4 weeks out, you might be at 90. So that'll help you decide which option you're in. Right now, May, 17 days left to expiration. Not a whole lot of meat on the bone. 45 days for June, though, is a great one. You could, though, go June 60 and kind of be at the money or a little bit in the money. That'd be a little pricey. The June expirations, the strikes that have the most open interest and the most volume today, are a little higher. They're 65 and 70, so that you can tell there's probably spreads going on there. That's a 65 to 70 spread idea that's happening right now, especially today. That was the high volume strikes, 1,000 contracts at 65, 2,300 at 70. So that could be a way to go, where you're looking slightly out of the money and trying to let this thing go 10 points in the money. But that's the idea from a swing perspective here. This one looks really good short term at the current level, and if it's enough of a rejection, we could be bouncing back pretty good back toward the previous close. Okay, another one here to look out for is RIOT. This is RIOT blockchain, very similar to Pinterest right now if you look at it. We have this key range low right there. This is also a major kind of market structure level, CLVN in the chart. It's trying to hold this edge right now. What we've talked about in this room is this key range is tremendous. Obviously, this went from nothing to something very quickly. Another one of those that went from $2 a share and then hit 80. And this one started in November. So this is not like one that started way back when. This one started rallying mid-November around vaccine time and rallied higher. Huge move. Anyways, great key range here, designed to keep the market kind of in check for a while, but that key range also has extensions that take this up to $124.76. Down the road, do we get to 125 in this name? Again, who knows? But we have great energy, we have great impulse range, we have great tools that help us, and I think this right here, if you get to the key range low and reject somewhere between 30 and 35, you may have a shot to double this thing back to 60, which is just recent highs. Okay? If this thing hits 30, you can hit 60 here. It just did that. It just went from 60 to 34, 35. It can do it again. If it's 35 as an entry, 70's the target. It hit that before too. I mean, it's not far off. But now if it gets to 120, you've now got 4x, right? You have 30 entry, double to 60, triple, quadruple to 120 up ahead if this thing works out in that way. So RIOT is one that, again, I would call this a speculative trade idea. 30 to 120 looks like a good strategy until you enter at 30 and then it's all of a sudden back to $2. That can happen, right? So you always want to leverage yourself in an appropriate way. You want to mind your risk. And if you were to take an idea like this, say 30 is the entry. I like 30. Say we drop into 30, you're filled. You have your, oh shit re-entry here, right? Oh shit, the market dropped some more. We're at $12. Let me enter the next half here. Now you've averaged in and can bounce it back to the breakdown point. So there's always kind of an opportunity there to manage the risk, mitigate the risk, add back if things don't don't work out. But always know when you have a speculative idea like this, it could always come back to where it went from. So you don't want to go all in on some of these, right? Mind the risk. So this is one right here where I think from 30 bucks, even I don't know if we get below 30, but we could. But 30 bucks there, at the very least, could be a good early entry for a double back to 60. I mean, give it a shot and see how that plays out. So we'll be watching this one right here. That's RIOT. Another one we've been looking at here is BA. Okay, good question there. Why is it speculative? Can you explain what you see when you label a stock speculative? I say that for those ones that have a chart that looks like this, where you have rallied from nothing to immense proportions. You've gone from $2, then all of a sudden you're at 25, then you're back to 10, then you're back up to 80, and you're down to 35. That's not an investment stock. That's not one that you can sleep at night and hold. And this is one where it's really volatile and speculative in that it can get cut in half or more very quickly, and then can jump and double very quickly. It's just back and forth. Whereas some other ones are more, Apple's not going to be trading like this. It's not going to be going from 10 to 80 anytime soon, right? It's more. It just has more foundation and roots about itself. So I label something more speculative when you have those wild swings, where if you buy at 30, doesn't mean that it has to hold 30 or even just pull back to 25. It could drop back to 2. I mean, it could really go all the way back down. So BA, we talked about BA here this morning as the market reopens and everything's chugging along right now. BA was on lows when we looked at it this morning. I mentioned that if we were breaking down through this 230 level and this descending pattern, we potentially have a move that could take us, into this zone. And if so, that would be a tremendous buy for continuation higher. I still think Boeing is on a clear path higher, although it's taken the scenic route. It's still a very clear upward trending type of market. 220 right here is a really good level that today held 225, put in a rejection low. Are we about to see the next rotation higher already? When you have a failed low like today, where it took out a month's worth of lows and then was able to close back above them, it's usually an indication that we're going to try and work our way higher again. I thought we had a potential move back toward the 200 day. So this is one of those where this is a swing candidate right now. The midpoint entry 230. You pull back toward 230, 231. It could continue higher and swing you back toward 255. So this is a swing opportunity, 230 to 255. The longer term entry, say this were to fail, you got to do something in here, right? Between 190 and 200 would be the long term. You get in here, you might be able to hold it for a while. But right now, great run of the recent stops, a nice strong rejection tail. A big day, 197% of ADR. That's huge. So when you see that, I think short term we have a rotation back up. 254 could be ahead, 255. Right now we're trading 233, so that's about a plus 20. And one way to go here again, if we think this thing is moving higher, you could be slightly out of the money, call it a 240. Call and let this thing rally. You can go out of money, call spread 235, 240 and let that thing work. Or you can just go in and say I'm going to be in at the money 230 and let it go. This thing has a pretty good shot to get going, even just to that target. So the very short term swing idea here. Again, if you're at the money 230 right now, the at the money call is 1385, but a pullback would drop it a couple of points into the 11s or so. So something to consider there. But a spread would probably be the best way to go on this one, just to keep that price in check. That is BA. Here's one LTHM that I came across. Several that look similar here. You're going to see two in a row that look very similar. You know, big time rally out of this one. Again, another one that not only doubled from $4, but tripled, quadrupled, and then went up 6x from those lows. Once that markup phase was done, we've had this period here of compression. That compression right here has kind of a level right around that 19 zone right here. This looks really good for potential expansion soon. We're through earnings. It spent its entire time going sideways after the last earnings. Perhaps it's ready to see some expansion up ahead. So this is one of those compression may lead to expansion opportunities. Back-to-back narrow pivot ranges. And this pivot range for the month is actually inside the previous month's pivot range, so it's an inside value. Today, failed new low, rejection tail, higher lows. Is this indicative of a push to come to the upside? Again, I always mention that these types of ranges can be frustrating because they can continue to go sideways for a lot longer than you like before you get the breakout. But sometimes a signal and a shakeout like this with a signal could be indicative that the breakout is now coming. So we'll see if this can get going. An entry zone for this one is anything 1750 to 18 even, and that could provide an opportunity to push this thing to 20, maybe higher toward 24 down the road. So watching to see if this one's in play here tomorrow. If it can get a breakout from this range, look how many months it is, 1, 2, 3, 4 months. It could have not only a 1 month trend up, but it can have a multiple month trending move higher. So watching LTHM. Another one that's very similar to that one is MGY. MGY. That's a oil and gas stock. Another one that trended from the lows. Look at that, $4 to $13. The last one was 4 to 24. And then you compress like this. You're chopping around the previous quarter's close. And now you have a bit of a failed new low. Rejection signal. Again, I would be cautious because one thing I don't like as much is a signal inside of a trading range. It's not my favorite. So, you know, you got to start seeing some expansion soon. If we can get a transition day through $12, it opens up some upside, and now you know you got a multi-month trend that could occur over the next 1 to 2 months. So this is one that could be short-term bullish here pretty soon. J&J was very interesting here. This one has a narrow pivot range for the month as well. See it right there, narrow pivot range, and it's inside the last month, so it's an inside value relationship, narrow value, and now it appears to be breaking to the upside a bit. I mean, it's not through the 168s, but it came out of this range and took the previous quarter's close bid. Is this one about to open it up to the upside? I know that you know, they have some headlines with their vaccine here, but it doesn't appear to be affecting it that much right now, and it's not that many number of people, although every case is probably sad. But this thing right here has a shot to open it up to the upside. You have enough sideways, inside value relationships, narrow value relationship, and a breakaway trend day here. Can this thing stay above 165 and start a rotation higher? It could be tremendous to the upside. A great key range right here. Could give us an upside target. Right now that upside target points us to about 180 or so. So good potential mover here is J&J. WBA. WBA is one that I wanted to talk about here. This one, if you recall, has that that buy signal that I liked from before. This was the buy signal that we talked about a little bit earlier, where you have that big trend day up, you break out of a range, big trend day up, and then you have a very aggressive shakeout leg the next day, and then you close with an aggressive reversal and close above that prior mid. That buy signal right there can tend to be very, very bullish, tremendously so, where just on a one-day basis it can have one big day up like this, and it can trigger a continuation up. So I really, really like this signal right here. Anytime you have a big day and then you follow it with a big rejection like this, a shakeout, the follow-up can be very, very significant. So tomorrow, this will be one that should be at the top of the list here for a potential trend day candidate. If it can open strong, if it opens, say it were to open at 54.40, I mean that might be enough to just trigger this thing higher. Now, if we do pull back, 53.50 could be a pullback, and then we break through 2-day highs. That's a great way to go. But this one is a great short-term swing candidate. The upside target being 57.05, that's the previous highs here, and then you have the potential to continue higher. But a one-day mover tomorrow with the potential of a swing continuation. Something like this back here. You get that big swing, swift pullback, you turn higher, and the next day looks something like that. That could be ahead tomorrow for WBA. Keep an eye on that one. Now, I will say just one thing as well. You can have the same strength move, but in the opposite direction in this candidate if tomorrow fails to hold that level. So if for some reason we fail to hold that midpoint tomorrow, that would tend to be a huge break the other way, which then triggers a massive continuation downward of some sort. So that midpoint is very important. There's been times where this pattern has developed, but as soon as it fails that mid, I mean it's a huge failure. So tomorrow could be a big day for this one, likely to the upside, but it could be in either direction. This would be one to watch from a short-term perspective here as a swing candidate. Let's take a look here at Tdoc, and I see some other ones that came in here. I'll take a look at those as well. Tdoc is one to keep an eye on from just a pure valuation type of perspective, price perspective versus where it has been. There's no real setup or rejection just yet. I mean, there's a little bit of a tail here, but there's not enough of a signal tail. It is a squat bar. But what you'll notice about today is that is the lowest low since last June. So it's not quite a 52-week low, but it is very close to that. And that's after topping out at 300, and now it's dropped back toward today's low, which is 160. No, today's low is 150 something, right? Let's see, it's not updating my thing there. Today's low, 153. So basically cut in half from that high. 308, 154 would be half, and it went to 153. So that is a perfect 50% haircut from the high. It is almost a perfect 52-day low, which some scans pick that up. People love those. What I like about it, it's not just that it's, the lowest low of the year, but it broke down below these major lows that we've been relying on for a while and wiped them out. So this one, just from kind of a value standpoint, it's just got cut in half. And it's on the other side of this D-shaped profile in the lower portion of this value. This might be a spot here that makes sense to watch for a reversal back up. 200 could be around the corner. And 200 alone would be a pretty decent move, but you might have as high as 240 at the very least on the next bounce. 240 would be a decent move. You're basically trading this range right here. So that's the high of the range, this is the low of the range. If it can get back above this zone, you go to the top of that range, which is the top of the D shape. So this is a thought here for Tdoc. Again, no signs of rejection yet, but we're in a spot that is starting to look enticing just from a pure price standpoint, where we are on the chart and how this thing might go. I would say if we needed to go a little bit lower, then 146 is a good spot, because that's where these previous lows are. Maybe it needs to bounce into that zone before it starts working higher. We'll see. And then the other last consideration is that this is the key range low, key range high, and it broke the key range low. So there's your 50, and there's 100% targets here. That 100% target is about 110. Is that going to now take us through this LVN channel? Is it time to come through there and take this out? So watching this one, it's not quite ready yet, but it's in a spot where we may start to bounce. And if we don't, man, that $90 level looks great. I know we're at 158 right now, but from a kind of a buy it and hold it type of standpoint, man, who wouldn't like 89, 90 in that LVN? That was the breakout point here. Are we coming all the way back? Because that would be a tremendous buy right back up. So long-term idea, but right now this is more the shorter-term idea. Can it bounce off 145, 155? Because if so, I think we can get back to 200 over the course of the next month to 6 weeks, right? And if not, oof, things get really ugly really fast. So one of those ones that's kind of in the oven, baking a little bit, needs a little bit more time, but I wanted to bring it to your attention. Another one that I wanted to bring to your attention is VMW. This one is one that has not moved in a long time. It's been a bummer of a stock because it was such a great mover before, very active in the stock before, but not so active here recently, mainly because it's been stuck inside this key range. So it developed that key range and just got stuck and trapped. Again, when you have a great key range, you know where the entries are, right? It's right at that lower trap below. It's right at that lower area. That's where you buy or try to buy. Ideally, trap below and buy. Not always a perfect bounce like this, but you get the point. And then at the top up here, we finally got to the top. The point of this is we finally made a move through the top here. A couple weeks ago, broke through the top, had a big push up. Now we've gotten a 2-week pullback. And today's bar looks like that. A rejection off the lows. It's kind of sitting on these highs back here, and the breakout point is sitting on it. You can see the rising Pima trigger zone. Is VMware about to bounce? I mean, I have been very, very iffy this stock for a while now, since it's been stuck in this range. But is it making the move? And it looks as though it is making a move right now. It has a great push out of the range that's happened so far. Today's rejection could be a little stronger, I guess, but it's in the right spot. It's in the right spot. Can it start getting back above 162s? It opens up a little bit of strength. This one could be a candidate that works its way higher. If it can continue to hold 157.5, at the very least, we're retesting highs with a shot to actually start moving out of this range at some point. So this one could be a longer-term candidate that could start to work its way higher. Got to hold that 157.5. Hey, Ram, here's CVS. Major breakout in CVS here. Tremendous move today on earnings. Gap out of range in value, a big rally up today, 4+%. Now looking at this one, it's interesting here. Here I'm going to make that a yes for right now. So looking at this one, one thing that stands out obviously is this one had been down for many, many, many years. The high was back here in 2015 and has been down many years. The higher low, coincidentally, comes during COVID. That's the higher low. Another higher low, and you got yourself a rounded bottom now. Today's breakout, is it the breakout? Is it the one? And are you now about to see a transition? Again, I'm looking at a weekly chart, super long term. 85 has been the level for us in this chart for a long time. You know, we mentioned back here, if you can't hold it, watch out below. Makes it resistance, etc. And now that, you know, you're higher low, you start coming back to that breakdown point. You know, another case of a D-shaped profile here, bouncing off the lower edge, now in the upper zone. This is the, you know, transition. Can it start making its move now here? So 85 to 115 is the next distribution above. Can it make that move? Today's breakout is tremendous. You can see the week-long breakout so far on a Tuesday. It needs to reclaim 85 in order to confirm that move higher, but it looks like it's making a move for that level. So again, when you look at CVS here, major continuation. You have recent highs all back here. So above 82 is where you start seeing the rejection come into play. So this one's going to be interesting. Does it find a rejection in this zone like it has over the last several years? Or is this going to lead to a breakout through those 85s and higher? We're still 4 points shy of those 85, so still a long way to go. But this is a great short-term breakout. I think it's going to be very interesting to see what happens between 82 and 84 up above. Here's LESL. BC asking about this one. A very good move here. Great failed low right there. Midpoint retest. That triggered a really solid move up. You see this 8-period average is rising. Stacked and sloped PIMAs as well. Hitting the 8-period and bouncing a little bit today. Perhaps not as much of a pullback yet as you like, but generally speaking, this one's still working its way higher. Still strong lows and higher lows, higher highs. From this pivot range relationship, it is now higher for the month. So we could still pull back as deep as this level right here, and it could still be an opportunity to buy and continue. So any pullback probably is an opportunity to continue this thing a little bit higher. At least one more rotation. It gets thin up here above 31 though. So anytime you have one of these IPO charts, you're working with less data, less to look at here. So I wouldn't overshoot just yet. But I think, you know, 28 could open up a 32, 33 type of move. 27 needs to hold overall in this scenario. So some short-term potential strength on that one coming up. Another one you mentioned here is ARVL. ARVL here, trying to change the bias here. This looks fairly bullish. Man, did they get crushed on earnings here. Minus 13. You can see it closed lower, gapped up above the mid, so I have an MGR signal here. That's an MGR live, so it didn't close above the open, but that move right now is happening after that pivot range right here developed a lower value relationship, and then it closed above it, so it's a change of bias. So when you drop into the pivot range, it's now to be defended. It's being defended right at the 200-day after it's been reclaimed. And one more thing, if you kind of look back and call this 18 and look back this way, 18 has been the bottom of the trading range, right? And then you broke down below it. Now you're trying to reclaim those 18. So if it can reclaim 18, which it's trying to the last couple of days, it opens up a move off that level to the next top of the next range. So 18 to 26 to 28 could be in play. Could be in play on this one. I would say for this one, that's your key. No, this is your key pivot right there. That's 16. So the bottom of the pivot range would become the key level. Jobs is another one mentioned here. Let's take a look at that one. And we'll look at ZM as well. Jobs. Not sure I've seen this one here. Long-term compression. Look at that jazz. Wow. A lot of range-bound action here. A lot of chop. The result of all that, when you kind of lay it down in a volume profile looks like that. Today's move, a huge gap up to the 200-day and right to the CVPOC, HVN. Whenever we're sitting at CVPOC, it could get stuck there, stuck in the mud, but generally be working its way higher after rotating from the lower end of the range. So from this one, we're at CVPOC, so there's no kind of edge. Ideally, you want to be, rejecting an LVN so you can return it to value, right? We're at value. And the last time we were here, we did that around CVPOC, then we dropped and came back. I kind of feel like this one might get stuck again. We might be trapped again. As long as we hold above 65s here, perhaps we have a general uptrending move that could take us towards 75, 77, but we might get trapped first and then make a move. So those are thoughts here on jobs. ZM, another one here. ZM is testing the previous quarter's low. So a new low on the quarter, an LVN here. This is almost like Tdoc. I would put this in the same class as Tdoc in that it was one of those that really came alive during the COVID meltdown, and ever since it's been kind of retrading back through the profile and filling out certain areas. This is an LVN here. I'll be honest, with this one, we haven't really gotten it to go higher lately. I mean, the one time we had it as a buy candidate was the beginning of the year. We talked about it. If it can hold that low here, that was a buy opportunity for a move back to the middle, maybe toward the top. And that move occurred. Then earnings comes out and this happens, and that's just a wild move. And now we've sat at these lows after the earnings drop. It's just not healthy looking. It doesn't look like it has that bounce to it that it can get. This looks heavy. It looks like it needs to continue to kind of find that low, and that might be also what needs to happen with Tdoc. I mentioned it's still in the oven. It's becoming a good opportunity, but it's still in the oven. It's not quite ready just yet. This one might be the same deal. We still might need to go a little bit lower. Look how heavy it's been at these lows, just crushed after earnings and then just sat. I just haven't really seen much to like out of this one lately. And lately has now been months and months in the making. Like it's just ever since this thing happened, it hasn't been the same. And you can see this LVN here from this distribution, and now we're hugging this side. And if we fail here, that side might be open. So right now, I would say, if you're looking at it from kind of a swing, short-term perspective, this is a great zone to watch for rejection. 275 to 300, if you see some sort of rejection there, I mean a good rejection, right? We're talking, a good turnaround here, a good tail. That could get you 345. 275 to 345 could be an easy short-term idea. I would say if you're looking for kind of a longer-term investment style idea, this LVN is probably worth waiting for. 175, because a 175 print has a ton of upside ahead. I mean, 175 doubles you to 350. You know, that's doable. Versus right now 300, you're trying to get a new all-time high to 600 here. The first crop of folks are probably trying that. You know, it just depends on where you want to look for. So I think from a swing perspective, we're in a zone where it could work out, but I haven't seen much to like from a longer term perspective, and it may need to come down here and get that low. So this low down here, about 175, 180, is about the same as that $89, $9 low in Tdoc. Those are two very good LVNs down there to hunt. Let's see. A couple more on the list here, and then I will leave you to it. This is MS. Morgan Stanley here, trending up. This is a short-term swing candidate for those of you that have a 1 to 5 day outlook, maybe a 2-week, 3-week outlook. A little bit of a compression phase here, broke to the upside. Here's your little pullback. Nice buy signal here. That's a wick reversal signal. You have the rising Pima trigger zone, which was defended. All of this looks really good. A midpoint retest would put you back to about 82s. We're at 82.60. So if you get a 50-cent pullback tomorrow morning, that might be enough, right? 80, 82, 82.15. That could be an entry for a move to 85, 86. Actually, that high would take you to about 87s, 86.64. So an 82 to 87 would be a +5 move. That's just, you know, the 1 week idea. But the reason I like this one is because it has the potential to rotate higher over the next 1 to 2 months. You know, you have this compression phase 1 month, 2 months. If we're breaking out right now, we might start the rotation here where we trend higher. Again, needs to hold those 82s. And one last one. Let's take a look at one last one here. Tandem. I haven't talked a whole lot about Tandem here recently in the monthly outlooks. The last time we talked about it was here in our trading room. We had a narrow range there, and we mentioned that this is boding well for a breakout pretty soon. The very next day, a great breakout and continuation, a midpoint retest and go. That was a really solid little move there for about 8 to 10 handles. Now, after that breakout, we are retesting the breakout point yet again, retesting the bottom of the pivot range for the month, and could be headed for another wave up. So if this thing can hold 90, 90 seems to be a key level for this one. It is a key level. It says so right here on the chart. It has been our key level for a very long time. And whenever it traded below it here, eventually it popped back above it there. To hold that level would suggest that we make a move higher. This one might be going 90 to 105s up ahead, and that could be a pretty good move. Now keep in mind, earnings coming up here, I think tomorrow. That's tomorrow, Cinco de Mayo. So that could provide a pretty good gap move or some sort of action. I would say as long as we hold 90, there's a shot to get this thing going to the upside. But this one's been a really good mover here recently, mostly to the downside. Holding the $80 area was significant for this one on the way down, and now with the potential to form a higher low here, we could be looking at a 105 move up ahead. So 90 to 105 could be a swing target for Tandem in the very near term ahead. If earnings is weak or the reaction is bad tomorrow morning or tomorrow the next day, whenever it comes out, let me see, is this before the market? So this is after the market. We got another day here, but say price were to gap down to 89 after earnings, that could be a crushing move back to 80. So something to keep in mind with this one. All right, everyone. Well, I'm going to go ahead and call it a day there for the monthly outlook. Thanks everyone for joining me here today. We covered a ton of charts, a ton of candidates, a lot of great requests here by you all. I really like WBA from a very short-term perspective tomorrow. We talked about several candidates that could double, including RIOT and PINs. BA looks like a great short-term candidate. We talked short and long-term entries for many of these stocks as well. We'll see how they play out. Remember, Bitcoin with that new key range could be looking at a double down the way if we drop into the low 42K zone. All right, everyone, have a fantastic rest of your evening. I will see you all in the trading room. Take care, folks. See you soon.